Hello there, Maverick traders. This is Rob Reinhold. It is June 13th. Let's get into it. This has already been a great week, and I'm telling you, we haven't even gotten to the good stuff yet. So let's break down what happened to the market today. In the market today, we had another bullish day in equities, and that came off the heels of some news. First off, we got some better than expected news out of the UK. Their employment report was much stronger than expected, and the pound was the best performing currency of the day. We also got the US CPI, that says PPI, it should say CPI, was below expectations. The headline number was supposed to be 0.2, it came in as 0.1, and year over year was supposed to be 4.1, and it was at 4.0. Okay, so a little bit weaker than expected. However, the core CPI was as expected at 0.4%, which is still well above the Fed's range. So we have regular overall inflation. When you measure in food, gas, clothing, all these things, inflation is going down. When you take out those things and you take a look at things like wages, rents, car prices, healthcare, that is still stubbornly strong. We have the FOMC meeting tomorrow. We'll hear what they think about the report. But right now, the expectation of a rate hike is only 8%. Before the CPI, it was around 27%. So right now, the market is absolutely convinced that there is not going to be any sort of rate hike tomorrow when we hear from the Fed. So the markets rallied on the news. We have the SPX up about 0.7%, the VT a little bit better. Cryptos were basically flat today. We'll take a look at the charts. They're basically flat here. Gold that was up nicely in the morning had a huge intraday reversal and turned down, and that's likely due to the dollar having a little bit of a reversal intraday. We'll take a look at that. And then oil had a big pop back. Oil's been extremely weak. This 2.9% is really in the face of oil losing 15-20% in the past 2 weeks. So it's not really that big of a deal when you think about oil in its totality. Let's take a look at the chart on the S&P, and you can see we're just off to the races. This is simply a nice high base breakout from a longer high base breakout. So if we take a look at this, let's call this wave 1, wave 2, wave 3. We potentially have a little bit more on this before probably a pullback or a base before a little bit of a blow off top. So equities look very, very strong here. We've been at a +3 on equities, the most bullish we could be for about 2 or 3 weeks now. We take a look at the 10-year bond. This is the only thing I'm keeping an eye on that could potentially ruin the rally in equities. If you take a look back here, back in March, when we came all the way up to 4%, equities got scared. They got scared and pulled back a little bit. Well, not the NASDAQ stocks, but the rest of the stocks did. Here we are at a major trend line resistance going all the way back to last year. We're also up against the resistance of just a couple of weeks ago. If we break out higher tomorrow, now we're up into the 3.94% area, all of a sudden the stock market may not like that. They may not like that whatsoever. We'll just have to wait and see what happens with the Fed meeting. Remember, we are meeting live during the Fed meeting, so come join us if you can. We'll have up to the second commentary on what's going on with all these things, rates included. But I think if rates break higher, I actually think that this equity market is not going to like it. I'm not saying it's going to sell off hard, but we've been going up every single day. We might have a significant pullback of 2, 3, 4% if interest rates do get too high. We come over here to look at the cryptos, and hopefully this chart doesn't excite anyone. It doesn't excite me. This is not a great chart. You can see we broke down, and take a look. After this huge breakdown last week, no one's buying. This is a terrible bit of price action. This looks more like a low base to me. I would much rather be a seller than a buyer of cryptos at the minute. So if we take a look at the daily performance today, take a look at the performance, throw out Bitcoin Cash. It had a spike of 3%. Who knows why? It's cryptos. Everything else, totally flat. At one point they were up and they all sold off. It's telling you that these things are not in a buy spot at the moment. We come over here to crypto. We actually like the yen as the #1 short this week. We like the yen as the best short, and we like the Aussie as the best long, and we also like the pound as the best long. Well, the Aussie forgot to get the note from us, and it was up earlier in the day, and then it gave some back. but the pound was very strong here. So pound yen, great currency cross. We'll take a look at that one because that's one I'm continuing to take a look at. Now remember, in our currency room video over the weekend, we talked about how this week was going to be a week of two parts: pre-Fed meeting and post-Fed meeting. So pre-Fed meeting, we said, hey, look, we like yen short, we like Aussie and pound long, and then all of a sudden, we weren't even talking about dollar because dollar hasn't really done all that much. Starting tomorrow on, it is going to be a story of what happens with the dollar. And I'll get into that when we get into looking at some potential trades here. But I like the dollar against either the yen or the European currencies. That's really where I'm going to be looking. We could also take a look at stuff like pound dollar, which I'm sure we will. But again, the currency market is going to be absolutely dynamite for the rest of this week. I don't see any reason you want to spend any amount of time on crypto here. The currency market is absolutely where it is. As I said, we've been at a +3 now for the last 3 weeks. This is about as bullish as equity markets get. Let's take a look at the schedule because holy cow. And look, there is so much on the schedule, I'm not even going to talk about Thursday or Friday. Let's just talk about tomorrow. Tomorrow we get the PPI in the morning. For those of you playing the pound, you do get a GDP report in the morning. Then we get the FOMC meeting. As I said earlier, we're meeting live for this. We're going to be trading this live. And then take a look. After the Fed meeting, it's not done. We have GDP out of New Zealand. We have the employment report out of Australia. And then we have Chinese industrial production. Wow. What a great setup. Tomorrow, you absolutely want to be active in your trades. There's going to be things moving. Just make sure you're in the right stuff, moving the right direction, have your risk management on point. If it doesn't follow through, take your loss, move on. There's going to be plenty of opportunities over the next 2 days, as you can see. So let's jump into each currency one by one, and we'll score them, and that will give us the currency crosses we're going to be taking a look at. I am not going to waste anyone's time with cryptos, so let's go straight to currencies. Foreign currencies. So here is the dollar. Now, we drew some lines here on the dollar. We said, okay, we got this little support point in here. This is a daily chart on the dollar. And you can see we've now dropped below that. Every time it's tried to rally back up there, it's hit resistance. So I'm looking for potential short dollar crosses on any rally. And take a look at this. This is a really nice base that is forming. Now, what we're looking at here is our US dollar proprietary baskets, where it's equally weighted against all the other 7 currencies. This is how we take a look at the dollar in general against everything else. So the dollar in general has been weak over the last 2 weeks. We've been basing. I think the dollar is ready for either a breakdown or a breakout. It's why I'm really liking where dollar is going into tomorrow's meeting. We like the yen short, and we continue to like the yen short. Now, that being said, we loved the yen short just over the last 2 days. You can see we're now getting closer to some support points that we can't ignore. Now look, there's still some room. You still have some room to go in yen crosses, but I think down here you've got to be a little wary of some bounces here. So we'd much rather be a seller of yen on little rallies. Any short-term rally, I think you absolutely want to go hit that yen on the short side against something that's showing some relative strength. Let's move on next to the Swiss franc. The Swiss franc was also a currency that we liked. We had just broken below this support last Friday. We got a little bounce yesterday. And you can see here, this move right here, not too impressive. So we are hitting our heads up against this resistance point that we just broke 2 days ago. I actually really like this as well. If we get a red candle tomorrow, I'm absolutely looking for some Swiss franc on the short side. The euro did not break below its support here. You can see we had some support. We've now bounced up, so that's fine. That's fine. We know it's in a little range here between this 131 and 132 area. Great. Let's just be a seller up here at the 132 area. So right now, we're right in the middle of this range. I'm not too interested in trying to figure out the euro, especially when I've got yen and Swiss franc as great shorts. Let's jump over here to the pound. We like the pound this week. We continue to like the pound this week. And the candles are great. There's really nothing bad you can say about this. other than, okay, we've had a big run. We've had a big run over the last couple hours. Maybe it needs to take a little pause. Okay, I'll agree with that. So this here's a 4-hour chart. So as you can see, we've had 5 up candles now. That's 20 hours, almost a full day of buying. Okay, we could easily see a pullback and a base here. I mean, take a look. We get about 5 days and we get some sort of choppy action. Then we get some more days. That's all we're looking for here. All we're saying is, let's let this thing cool off. So pound was the best currency at the first of the week. It's now a little bit extended. I'm waiting for a pullback to base on it. Let's come over here to CAD. And CAD had been really disappointing because it had a great trend going. Just a great trend going, and then it pulled back here to the 50, rallied back up, and then we have failed fairly spectacularly. Now look, we did get a nice bounce here, but until we clear out of this resistance, I really can't be bullish on the CAD as a whole. I just can't. So I'm waiting for the CAD to do something. If someone said, Rob, I want to short the CAD here because it's hot, is closer to its resistance and support, okay. That would be a fine way to start a trade. But here's the point. Is it the best short out there? And I say that the yen and the Swiss franc look like better shorts. So it's not great. It's not terrible. It's just in the middle. So whenever that happens, we just put it on the shelf and go look for something else. All right. So Aussie had a great run off the bottom. We have had this great run here. And it looks a little tired here. It looks a little tired. So now we have to talk about, okay, where do we think the next support levels are? I'm seeing a big bunch of support right in this area on Aussie. So I would love to see the Aussie come down a little bit more and then put us together a decent little bounce off that. At that point, I would absolutely be a buyer of the Aussie. The trend is still intact. Everything looks good. A pullback to the support line or to this 20 period moving average would be absolutely fine for me. Let's take a look at the daily chart on the Aussie real quick. You can see there's been a massive, massive trend change that is playing out. It's run quite a bit. We would love to see some basing, some pulling back, but Aussie to me still looks like a bullish currency overall. And here we have the Kiwi. Now we talked about the Kiwi's been terrible. And we said, okay, the Kiwi could have one of those weeks where it just gets a bid because it's been so lousy. And basically, that's probably what's happened here. We're coming up here to this trend line and these moving averages on a daily chart. 4-hour chart, it still looks okay. It's not my favorite. It's not my favorite here. But if someone said, Rob, you have to buy either the Kiwi or the Aussie right now, I would have to buy the Aussie. It looks a little, I would have to buy the Kiwi. It looks a little bit better. And look, and if you ever have a question of what is better, simply pair them up. Simply pair them up and you can see, okay, right now they're actually very, very similar. The Aussie and Kiwi are basically over the last, couple days. There's been no difference between the two. They've been correlated. But if we see any weakness dropping down here, you could easily say, okay, well, Aussie is now weakening against the Kiwi, and the Kiwi is the better trade. We'll see. We'll see what happens on it. Right now, it doesn't look like Aussie or Kiwi is showing any preference one or the other. Here's our currency ranking here. We've got the pound and the Kiwi looking the best. Aussie is just pulling back. We're waiting for that one. Our cryptos, they're pretty much untouchable here on the long side. And take a look, Swiss franc and yen are still the place to be. Now that dollar is sitting at a -1. And as I said, I wasn't going to trade the dollar at the first of the week. I'm absolutely looking to trade the dollar for the rest of the week. I think the dollar is going to be in play, and I would love to see, again, dollar, Swiss franc long. If there's a strong dollar, I want to pair it against the Swiss franc or the yen. If the dollar is weak, then I actually want to pair it against probably the pound or the Kiwi. So let's actually go take a look at those crosses right here, right now. I'm not looking for any entries here until the Fed meeting is over, but let's just start talking about it. And then again, in our session live tomorrow, we'll be taking possibly one of these trades. Let's start off first with dollar yen. Let's take a look at it here on a daily chart. Now we talked about this high base here. I really like how this trade is setting up. We had a big expansion, and it's now been almost a month of sitting here between right below 139 and right above 140. If this thing has some strength tomorrow, it's an absolute high base breakout on a daily chart. I want to be in it. I want to be involved. So looking at this here, I mean, you could... tough call here because we got some prior resistance right around here at 140.30. What I would love to see, I would love to see this back off, back down here into the 139.80 area. That would be awesome. And then on a move tomorrow after the Fed meeting, a breakout above 140.30, that would be a great entry. We'll have to see what happens over the next 20 hours. Who knows? It might actually start to work its way higher, and then you might actually have to go all the way up here and say, okay, above 140.90 is the real breakout point. But I think if we back off, I think this 140.40 area is about the right area for an entry on dollar yen. And since we're here, let's talk about dollar Swiss franc. Here it is. Let's take a look at here on a daily chart. Now you can see the Swiss franc has been substantially stronger than the yen. We do have this trend change here on a daily chart. So we have the 20 crossing up above the 50. It happened back here when it ultimately failed. But you can see here, these signals here are pretty decent trend change signals where you can get in some good longer term trends. So here we are. We're sitting here at the bottom. I'm going to be looking at 91.20, 91.25, somewhere around here for a breakout point. Same thing. I would love for this to go pull back a little bit, go sideways, give me a breakout tomorrow on the Fed report, and I'm absolutely happy to get in. Now, if I'm looking to play dollar short, so if the Fed comes out and they're a lot more dovish, then I think pound dollar is the trade. I think this is the trade. Here's the daily chart. You can see it looks great on a daily chart. We are uptrending. We've got some movement here. We do have some overhead resistance at 126.50. So that's probably going to be the point I'm looking at. 126.50. You show me you can get above that point. I'm looking to be a buyer here on pound dollar on the Fed meeting. And then last, I want to take a look at Aussie dollar because look, the Aussie was our favorite and it's pulling back. It's pulling back, but it's been the strongest and it's been the best, and we can't ignore that. Just right now, it's pulling back. This is also going to be another currency pair that I'm absolutely looking at off of a pullback. So let me get this pullback a little deeper. I'd love to see it right into this area of about 67.50. Give me a bounce off that, off of the Fed meeting. I'm absolutely looking to be in here, and you can, get a target up here, probably around 68.50 would be a good target. That's a nice little run here on the Aussie dollar. Let's wrap this up. Tomorrow, big news. We got the Fed statement at 2 p.m. We've got the press conference at 2:30. Come join us live, Maverick traders, for us. We're going to be looking at that report. We're going to be trading off of it. This is where the fireworks start. It's already been a good week, but let's keep this week going. Let's go make some pips. Thanks for joining me. Goodbye, everybody.